Good evening and welcome to day two Pips and Patterns 1.0 brought to you by Bidenax Nigeria. I'm Vida Brown Creator and I remain your moderator throughout this entire webinar series. As always, this webinar is designed for traders at all levels and prospective persons who intend to begin their journey in trading. Today, we'll be dissecting two key concepts in trading: time and liquidity. Here with us is the king of time himself, a day trader with 2+ years of experience who lives by the mantra, time is price. None more qualified to unravel to us this evening the mysteries of what beginners don't see. Today's topic is split into two parts for salient reasons that you'll be discovering in the course of this session. Permit me to introduce to you our esteemed speaker for today, none other than the man who says time is price. I am Dexter. Say hello to our listeners, Mr. Dexter.
Hello, V. Thank you so much for having me. Okay, that was interesting.
Thank you so much for joining us. Welcome, everyone. And without wasting much of your time, let's just get right into the business of the
Yeah,
day.
I'm game.
Okay, so I am Dexter.
hmm
It's an honor to have you here with us.
Thank you again.
It's been a dream and now it's a reality. Thank you
Yeah,
so much.
thank you.
So, without further ado, can you please very quickly share with us why time is such an important topic for conversation in the trading industry?
All right. Thank you again, once again.
Yeah.
So, time is a very important thing worldwide. I mean, we get to say things like time is everything. Without the understanding of the importance of time, we've had people go through life get to tell you that I should have done this better if I knew how to use my youthful time or my early adulthood and things like that. And when you want to look at the work life, it's so important that the time you open up your business or the time you step into the office, all of these things are actually very important. And it's our whole life literally revolves around a 24 hours clock. Every single thing. We sleep, we eat, we have time with loved ones, all around the clock. Okay. When you talking about trading, it's fascinating to see that a lot of people coming into trading do not easily grasp the fact that if time is that important in every single thing in your life, it has to also be very important when it comes to trading. And so you have even mentors, you have people jumping into strategies, whether it's smart money, whether it's supply and demand, whether it's whatever, and they immediately forget that the time you want to even utilize the strategy is more important than the strategy itself. Because when you're doing something at the wrong time, like you go to the gym, they tell you, okay, you don't want to eat past 7. If you eat past 7, there's no amount of workout you're going to do on your tummy to have a flat tummy as a model. They tell you things like this, right? And you get to understand that by just doing things by the wrong time, there's bound to be a consequence. In trading, by you just opening up your chart with the alpha model you have and executing at the wrong time, you're bound to have consequences that are most likely negative.
So, you mean consequences like losing all of my money?
If you're that impulsive, yes, obviously.
Okay.
Okay, but obviously the consequence has to be a loss. And I'd like to say briefly that you got it correct today, doing it at the wrong time is just luck.
Say that
Okay,
again, please, for
that
emphasis.
that you got it today correctly, doing it at the wrong time is just luck.
Okay.
So if you think you really got something, I dare you, okay, to do that again over and over, and you're gonna find out that because it was luck, it's less likely to happen 60% of the time as positive.
Wow, that was such a strong word. I know we are not dropping gems, but you've dropped a gem today, and that is something for our listeners to pay very keen attention to. So let's not go ahead of ourselves. Let's
Okay.
come back, right? You talked about smart money concepts, but I'm
Okay.
not going to take you on that just yet.
Mm.
Let's come home. How does an individual who is new to trading master the concept of time in itself and relate that to understanding the different trading sessions that exist in forex trading?
Okay, that's a beautiful one. The first thing is basic. Okay. So I get actually in life everything we're doing, we get to say you're beginners, intermediate, advanced. I get that. But life is really simple as it is. It's not much work. What time should you trade? And when you ask yourself, what time should you trade? The question is, okay, once you do your research, you understand that there are different sessions within the day. And these different sessions are attached to the global countries, or sorry, to the countries that are actually major global players in the finance market. So as a matter of fact, I would even like to say the continents. Okay. So when it comes to the finance market, you have Asia being a huge player,
Player, yeah.
okay, in the finance world. You have the Americans, okay, United States of America, and all the countries around there being huge players, with America being the top of the list. Then you have Europe, okay, and London being the top of the list. Because of how significant these countries are to the finance world, the thing that matters to us now is to understand when exactly do they open up their banks. It's as simple as that. When you're looking at the fact that over here, okay, right now we share the same time zone with the UK, but do we share the same time zone with the United States of America? Obviously not. Okay, so the difference in time makes it such that as a trader wherever you are, because you understand that these countries are major players in the finance market, it's very important to understand when they open up their banks. When you understand when they open up your banks, to make things easy for you, you want to calibrate that on your software, for example, TradingView, to one time. So what does that mean? I prefer to calibrate my entire software to the New York time because I believe that the entire market is actually really run by them. Okay. So every single thing on my chart shows New York time. So when you see 7 a.m., it is 7 a.m. New York time. Now you're going to ask yourself, what time is Asia? What time do the banks in Asia open up in reference to the New York time? That's going to be the 9 p.m. New York time. And when you're looking at the London, we're going to say the 2 a.m. New York time, which if you're looking at the London time is actually 8 a.m. London time or West African time. I don't know if you get the logic.
Yes, yes.
And when you're looking at the US, we're talking about 7 a.m. New York time. Obviously, that makes sense. I mean, in the US, they're open by 7 a.m. Major activity starts from 8:30. And so you get things like news embargo. Okay, news embargo being attached to the 8:30 a.m. time frame. And then you get things like equity open for the indices market, which is attached to the 9:30 a.m. These are key times within the operations of the United States of America's central bank. Okay, now to answer your question, how do you exactly as a beginner pick this and apply it to a strategy? How do you pick this and apply it to you as a beginner? First thing you want to know is what time is Asia? What time is New York morning? What time is the New York PM session? What time is the London session? And these are the key major sessions for me. When you understand that the Asian session starting with that, it has a window of operation. Now, this window of operation means it's peak hours. When you go to the bank today, you're going to understand that from 8:30 to 12 p.m. is normally the peak hours of operation within any bank. And if you're not there early on time, you're most likely going to be in the queue.
Yeah.
Okay?
Yeah,
But if you're
that's
going to the bank around like 2 p.m., you're less, except there was like serious things like shortage of cash, more bank issues, network issues. Yeah, you're going to see people really active there. But it's most likely that there is lower traffic in these banks by that time. So when we are saying 9 a.m. to 9 p.m. New York time to 12 a.m. New York time, we are saying that's the peak hour of operation for the Asian market. Okay, when we say 2 a.m. New York time, which again is 8 a.m. London time, because we're looking at the London session right now. When we say 2 a.m. New York time to 5 a.m., all right, New York time, we're talking about the peak hours in operation for London. And obviously, the same way we're saying 7 a.m. to 11 a.m. New York time, we're talking about the peak morning hours. Now, because when you're looking at indices, okay, this doesn't readily apply to Forex. Okay, so I have to make you understand that. When you're looking at the stock market or the indices, we like to look into the afternoon session. Okay, because transactions are still being made, stocks are still being bought and sold. Sometimes we have data release on quarterly earnings, monthly earnings of some companies within this PM session. And so we have the peak hours of the New York PM session being the 2 p.m. to the 3 p.m. And then you're going to have the final hour of trading. And the final hour of trading, especially bonds are closing up, the entire market is closing up, which is 3 p.m. to 4 p.m. So what I did right now was just give you a catalog of the most important times in trading. And so it's as simple as noting those things on your notebook and calibrating it to your local time wherever you're in the world.
Thank you so much, our esteemed speaker. So now that we've talked about the different trading sessions that exist in the trading industry, I would like us to particularly emphasize on if there is a perfect time
Okay?
to trade.
Okay?
Say, for instance, it's the Asian time. Is the Asian time the perfect time? Is the
Okay.
London or New York session the perfect? Is there a particular time that is significantly the perfect time to trade? And what are the things to consider in choosing which of these sessions anyone would want to trade? Are there things, factors to consider in
Okay.
making that decision?
All right. Perfection is unique to personal experience.
Hi.
Okay.
Gems, gems.
Perfection is unique to personal experience. What's perfect for me is due to what I've experienced. What's perfect for you is due to your experience and exposure. Okay. Any time can be good for anyone. What is the most important question, as a matter of fact, as a beginner? The most important question to answer yes is this. First, what's my lifestyle? What time within the day can I make myself available to look at price action? Okay.
Sorry, please, can you take that again for
Okay.
emphasis?
So the first thing you're going to look at is what's your lifestyle like? Like what's your day-to-day operation? Okay. Are you a worker? Do you do 9 to 5? Are you a student? Are you a nursing mom? Okay. Are you are you someone that hasn't found a job and you're just in? You're hoping for something good in the future. I mean, trading could be just that, something good. So necessarily you have most of the day to you, and you have the decision to binge watch Netflix or make yourself available to study price action. Okay. Now, when you know, I'm going to use the illustration of one that's doing 9 to 5. When you know that, for example, you're in any West African country and you have to go to work by 8 so that you could resume, say, 8:30 or say 8 itself, depending on your profession, and you know that you close by 5, you're going to understand that because you cannot cheat your boss, he's paying you at the end of the month. Because you cannot cheat your boss, you have to work between that window of time that you're being paid for. The next thing you're gonna ask yourself is, okay, what sessions are within my working hours? Because I cannot be trading during my working hours. If you want to establish maximum productivity, you have to do one thing at a time.
Yeah.
Multitasking is cool, but not everything can be multitasked. And if you're trading, you need concentration, like dialed in focus. Okay. So it's the last thing you want to multitask. All right. Now, can you trade the Asian session if you're in West Africa? Would you be able to wake up by 2 a.m. and be awake looking for a setup till like 4 a.m., 5 a.m.? Would you still be in the right frame of mind, conscious when you have to go to work by 8? Well, if that's not the case, how about the New York PM session? Okay, so can you be at home by 6 p.m., 7 p.m.? And can you allocate 1 to 2 hours of your time between 6 p.m. and 9 p.m. West African time to trade? What that means is that if you're a mother that does 9 to 5, for example, you should have had like your kids' lunch ready before like evening time. Like you want to plan ahead of time and you make them know, yo, you got to go in that fridge by 6 p.m. Take up whatever it is that has been planned for the day, warm yourself something, and because I got to work. Else, we're not going to have food in that fridge anytime soon. Okay, so you're going to plan your life with your spouse and your children so that you can be available to look at price from 6 to 9. Okay, now the next thing you're going to ask yourself, if I can be available from 6 to 9 to look at price, you're now looking at what strategy can I trade. And for the strategy you pick to trade, you have to backtest and tape read. Now, backtesting means you're going to look at old data. Tape reading means that you're going to now look at it with live markets. So you've had like 40 trading days of data to support the fact that your model is a 70% win rate model. Now, you're going to pick that data, what are those ABCDs to your model, and look at it live on price. And you're going to tell yourself, okay, A says I should look for this, B says I should look for this, and you do that for a period of 1 month. You see that that works, then guess what? Your game. You want to start taking risks with real money during that session. So at that moment, the PM session becomes perfect to you. The AM session cannot be perfect to you. The Asian session cannot be perfect to you. Like not every person can wake up by 2 a.m., go work on something this tedious mentally, and then still be sane to go to work by 8. Okay. So as I said, this whole thing about perfection is greatly tied to your experience. And once you've recognized the experience you're going through in life, because experience is continuous, it's not like a fixated thing, the next thing you're going to ask yourself as a trader is your exposure to the understanding of the concept you're applying in price.
Okay, well said.
So in case you're just joining in, okay, perfection of any time is dependent on which you pick, which you study, okay, what time frame it is you study, and then your due diligence to practice it within that time is going to become a perfect time to you because it fits into your work life.
Okay, thank you. So one of the key things you're known for is your mantra, time is price.
Okay.
So when you say that time is price, what do you really mean?
Okay. That's beautiful. All right. Now time
We
is price.
we did our homework,
I
obviously.
think.
Yeah.
So now time is price. Whenever you're trading, you're looking at figures. Whatever price is printing at the current, so whatever your candlestick, or let me say to be more general, whatever your asset is printing in numeric values as this is what value I am at this moment, that's price. That numeric value is price. Now, because we're in the act of taking buys and sells, you can't be in the middle when you're a trader. You can't be in between. In between means you're not trading. But if you're going to push a button, there is no equilibrium
Yeah.
kind of button of a
Yeah.
thing, okay? There's no indecision button. There is a buy,
And
there is a sell. Because time is of more importance to me, that is when you're trading, all right? I like to say that, as a matter of fact, I did take it from my mentor, okay? I like to agree to the idea that before you start thinking of price, candles, strategies, first ask yourself, what time is it?
Okay.
Yeah.
All right. So that one hits home. I had to gain some balance before we come right back. So what is one habit around timing or
Okay.
time itself that has helped you stay consistent for these 2+ years as a trader?
Okay, so first, I've been consistent in the latest 1 year. I'm heading 3 years right now, so it's two plus.
Yeah.
Yeah, and the first year was more of learning, more of trials and errors. My discovery of the concept time and how to apply it, because when you're going into very advanced topics of time, you're going to be hearing words like macros, going to be hearing words like, we'll leave that for another time, okay? But it's more than just sessions, okay? You can time the market to the very specific hour and minute window that it's most likely to do something. That's how precise it is. Now, how did that change my life? First off, being one that, I mean, most guys are not that elderly till they are in, say, they have responsibility, to
Yeah.
generalize it, whether it's a relationship that means something to you, or it's siblings that look up to you, or it's a family that you're the breadwinner for. I mean, most men come into this stage of, okay, I got to be serious with life when the word responsibility is attached to them. Because of the fact that naturally as men, we're everywhere. I mean, we want to test, we want to do, and we want to undo. Okay. Timing taught me that I could be more organized. I could be more organized because if I'm not even organized, I cannot make use of the knowledge time in relationship to trading. So it taught me how to plan my day. Like before now, I felt it cliche to be telling me you have a routine. Yeah, know when what time you're waking up, what time you pray, what time you brush your teeth, what time you set your goals for the next day, like set your goals for the next day before you sleep. Like that not be my life. I mean, what's that? We see as it goes, okay? But because I have to be organized, because I have to keep the job and I have to keep the trading skill and I have to be responsible, I had to start organizing myself. So every single thing I do right now is attached to time because that's opportunity for me. The wastage of any second, any minute. Do I fall this? Yes, I'm still improving, but the wastage of any of these things could be detrimental to the day being a successful day as a trader or a negative day as a trader.
Okay. So is profitability in trading dependent on the time or session a person trades?
Profitability is dependent on a whole lot of things. Time and the session is one of them. There is risks, there is impulse, there is character flaws, there is even the strategy you're using. There is environment, there is energy. Like, are you surrounded by positivity or negativity? There is relationships. There is a whole lot, and it's crazy because when you're a trader, you get to find out that every single thing in your life matters for you to be successful. Like, because you get to see that the slightest, okay, disorderliness in your life could just some way find its way into your chart. Because when you're trading, you are heavily emotional. You're attached to the decision of a yes or a no. You are the crossroads of a loss or a win. And when you attach finance to it, that's risk. Money means the world to a lot of people.
Yes, please, it
Okay.
does.
So when you understand that because I have to make a decision, I have to own this trade of I'm gonna be a buyer in this market, I'm gonna be a seller in this market. Because of the significance of that decision, the slightest turmoil in your life and the mismanagement of those events around you could literally make or mar, okay, your decision in price. And let me tell you, positive emotions is not necessarily going to make you win. So it's not like the idea is that, okay, I'm going to wash away all negative emotions. Because if you came in to the market with, oh, yo, yesterday I did a banger. Damn, and you went all around telling all your friends about how you did a couple of dollars, and you're like, I'm going to do it again today. And you come in high spirited, all pumped up. And the next thing you feel like, man, I don't have to follow my ABCD. I know this thing already. I've had a 5-day winning streak. And boom, 3 times the risks. Boom, a loss. It wasn't the matter of the fact that it was positive, but your management of these things around your life is very key. Look, when you come into chat, you are at the crossroads of, I don't want to make it like a life or death situation,
Yeah.
okay? But decision making is responsibility, like it's deep. And decision making attached to finance, attached to the fact that your child is going to feed or be hungry if you go into this place being a gangster, or you go into this place being a sound investor kind of trader, a sound person, a sober person. Okay, that those decisions, okay, are going to literally make come out. So it's not necessarily time.
Okay.
It's not necessarily sessions. You could have all those things checked. But yo, you're a drug addict and you came into this price high. You're going to see high.
Okay. So we've dwelled a lot on time, and unfortunately, it is the thing that we do not have right now. So let's get
Okay.
right into the next part, liquidity. Now, to liquidity, it sounds complex as a matter of fact, as a word in itself. And I'm aware that we have different types of liquidity when it comes to the forex market. And how is a person who is new to trading supposed to wrap his or her head around this word, liquidity, that sounds like a roadblock? It sounds like a literal bomb. And without feeling overwhelmed or lost in it, is there a way to understand what liquidity in trading is about as a beginner? What is it really about? Let's talk liquidity now. We've talked
Okay.
time, we've talked price. We're even going to talk
Okay.
relationship because you mentioned that. But let's
Okay.
talk about liquidity now. What is it really about?
Okay, so the easiest way to get confused as a beginner is to Google the word liquidity.
Okay.
Okay, that's the easiest way to confuse yourself, especially when you see all the grammar there. Okay, so okay, how is that chart right now? Liquidity is simply money.
It's simply
Money.
okay.
Okay. Um, make it that simple and you'll solve yourself a lot of problems. So when you're in the zone of trading, you're in, it's my session to trade. The question you're gonna ask yourself, every trader, as a matter of fact, every trader's goal, the moment they want to push a button, sell or buy, is to make profit. To make profitability or to be profitable, okay, in that decision, you need to be able to decipher where the profit is. So you're in it, you're in a maze, okay? Let's say pyramid structured maze, and you know there's a treasure. You have to navigate your way to where that treasure is. Okay, that's the same thing you do as a trader. You know the treasure is somewhere. You have a map, and the map tells you this is where the treasure is. So what do you do with the map? You use the map to trail your way to where the treasure is. When you're looking at price, you need to have skill sets that tell you this is where money is. In technical terms, this is where liquidity is. Okay? The understanding of where money is in the market is going to help you solve one of the key problems every trader has, bias. What is bias? Should I be bullish or should I be bearish for the day? And the decision of you being bullish or bearish for the day or the session is going to determine if you're going to be profitable or you're going to turn up negative for the day. So liquidity is money, and you want to ask yourself, where is the money every single day you're trading? If you can answer where the money is 70% of the time, you're going to be profitable.
Okay, thank you. So, a quick announcement before we forge ahead. A segment of this webinar is dedicated to answering questions from our listeners. So, please send your questions via the Telegram channel. There is a link in the chat box. If you check right now, you would see that. Please do not turn on your microphones. Send your questions via text, either through the chat box or via the link dropped here. It takes you to the Telegram channel, and that should be the destination for your questions so we could get that and give you the feedback that you need. So let's move on.
Yeah,
I am Dexter. So, how can liquidity be practically applied to make smarter trades? I think at this juncture it's time to
yeah, I
move
mean,
over to the chart.
I'll have to show charts for
Yes,
that.
please,
Yeah.
so our audience can understand and fully grasp what this liquidity talk is about right now.
Mhm. Okay, just give me a moment then.
All right. Please use this opportunity
All right.
to start sending in your questions. We have already received some questions from our listeners and our audience. All right, I am Dexter. Over to you,
Okay,
please.
so to ensure I don't go out of my bounds, do you mind repeating your question again? Okay.
Okay.
What I mean by out of my bounds, I don't do too much.
Please don't
All
do
right.
too much, but we don't have time.
Yeah.
So, how can liquidity be practically applied to
Okay.
make smarter trades?
All
That's the
right.
question.
All right.
Yeah.
So if you were following, you remember I mentioned that you should be able to ask yourself, where is money? Because we've saved ourselves the stress of pronouncing the liquidity.
Yeah.
Okay. And we're like, yo, where's money? Okay. Understanding where money is gonna you're gonna have to know where to look. Okay. And one of the places you want to look as a beginner starting out, I would advise every single day price closes. If your West African time closes by 10 p.m., um, go into price and mark out the last 3 day highs and lows. So, for example, you're gonna have my chart like this over here, and I had this all marked out to save time, because I mean, if I'm marking it all right now, it's not gonna do us some good. So, this is the current day we're trading, Tuesday. This is Monday. This is Friday. This is Thursday. Tuesday is the current trading day. Our goal is to be able to establish the last 3 days highs and lows. Above highs is what we call buy stops. Below lows is what we call sell stops. Okay, so I'm giving you some lingo that's going to help you, and you could do your research on some of these things. Every single candlestick has a high and a low. And within those candlesticks highs and lows, we have liquidity there, we have money there. When you're able to identify the last 3 days highs and lows, so you mark them out, you're gonna now need some certain skill sets. Let me explain what that skill set is. You're gonna be able to, you're gonna have to have a strategy that helps you pinpoint, okay, when is price turning? All right. Now, for example, you're gonna have Tuesday here. We have price having traded into day two's high, and we notice that it traded a bit into day three's high. Now, your next day or your most immediate day can be your day one. It is no particular order. So it trades into day three, but doesn't trade up to the high. Okay. It trades into day two's high. What do you have over there? Buy stops. And then it trades into day two's high, and then it rejects. And what does it do? It trades down. Are we together? So when you look at price, you're asking yourself, okay, if price takes out any of the last 3 days highs, you should be looking for lower prices. If price takes out any of the last 3 days lows, you should be looking for higher prices. Now, I'm a bit handicapped because there are some things I would love to talk about, but time is not gonna allow me. Probably maybe I'll get another session to like do this in greater details. But
Hopefully.
yeah, but what I mean by this is the simplest way to start out is, okay, for the next 20 days, if you're a beginner, mark out the last 3 days highs and low and observe what the current day did. Did it trade into either of the last 3 days highs of lows or lows? And then you're going to note on your notebook, okay, if it traded into day one's high, for example, did it close bearishly or did it close bullishly? Okay, your data on that is going to help you make better decisions on whether you're going to be bearish or bullish as a day trader. The other place I would add quickly, if you're looking for where to observe liquidity, I'd like you to look at sessions. Okay, so we talked about sessions: Asian session, London session, New York morning session, New York PM session. I'd like you to look at what was the lowest low created during the Asian session and the highest high created during the Asian session. The lowest low below that you're going to have again sell stops. Above the highest high, what are you going to have? Buy stops. And then if you're looking at the London session, I need you to decipher that. Now, if you're someone that trades the PM session, for example, and you know that the PM session starts from 1 o'clock or 2 p.m. most of the time, that's the peak hours. So, but I like to look at it from 1:30 p.m. to 4. Okay, as a whole, looking at the entirety to the last hour of trading, you're going to ask yourself, did the PM session trade into the New York AM session lows or London session lows or previous Asian lows? So if you notice this, I'll quickly add this. If you notice price here, you're going to see that, for example, we have this Asian lows over here. Price failed to trade into that. But guess what? We were able to trade into the lowest low that was created during the London session. And we had price drop a bit lower. And then as it dropped a bit lower, what did it do? It rallied higher for the day. So you just being able to establish how to find your turning points. Sorry, I can't do much of that right now because of time. I would love to show you how to like identify turning points when price trades into key liquidity levels. But for now, as a beginner, there's no rush. Okay, there's time, there's bid and ask. I need you to go into price and mark the highest highs and lowest lows, and then do well to mark off sessions, and then do well to mark the last 3 days highs and lows, and observe for the next 20 days. I would love to know, okay, if you're on the Telegram free group, which I'm a part of as a matter of fact, I would love to see your discoveries. What did you notice differently? Did you notice price being bearish 70% of the time after it took either of the previous day's highs, or was it the opposite in a case? So that's what I would love to see. So that's how you can easily identify this liquidity technically. That's one of the ways you can do that.
Oh, that was such a journey on liquidity and very insightful, I must say. So it's time for us to take a few questions from our audience. The handles for our socials is displayed on your screen right now. Please do well to send in your questions as private messages or send them via the link in the chat box on the Telegram channel. And we would take a few questions. For want of time, we cannot take all questions. This is the reason why you should tune in tomorrow for day 3. Just in case we are not able to take your questions today, we will definitely do well to answer your questions tomorrow. But for now, we have a question here. And it says, okay, this is for our speaker, obviously, to answer.
Oh, okay.
How can a trader know if a market or asset is highly liquid or not, since liquidity is money?
Okay. I'd like to rephrase that question. I get where the person is coming from, so
Okay.
I'd like to rephrase it in a better way
Okay.
for the listeners. And this is it. There's a word called volatility. Okay, this deals with the behavior of price during the day, okay,
Yeah.
and during any time. As I said, liquidity is money, so let's not complicate things. About when would the market be highly volatile in terms of when would it move more, when would it make more peeps, okay, when would it seek larger liquidity levels, or so let's use higher liquidity levels as bulls or lower liquidity levels as bears. Okay, has a, if you're asking when within the day is it likely to do that the most, I would say during the New York morning session, you're gonna have most of the time, 60% of the time, the highest volatility in price. And this volatility in price, this behavior, this erratic move in price up, down, is going to be seeking larger ranges of liquidity, which is money.
Okay, so the next question says, what time of the day typically has the highest liquidity in the Forex market?
Okay, in the Forex market, I'll still say New York morning session. In the Forex market, I'll still say New York morning session. Now, with
Okay.
a lot of the global things we're having around the world, news from Trump dropping tweets, from Fed Powell not being in sync, we have a situation where some days you could have, because of the news that comes up, high expansions, like heavy expansions with large volatility in the market, maybe the Asian session, and then you could have it happen sometimes even the PM session. So it's kind of a wild time now, okay, because of a lot of things going on worldwide. But Forex, I'll say New York morning session, you're good. That's 7 a.m. to 11 a.m.
Okay. This person says, I am interested in beginning my journey as a trader, but most traders I know seem to not have a life outside of trading. Wow. This is a personal question.
Oh, okay.
And now I am worried as to how this would affect my social relationships.
All right.
So I think I'm going to fine tune this question
Okay.
in a way that still is going to give an answer to
Yeah, yeah.
whoever asked this question.
Okay.
So is it possible for traders to have a trading and human relationship life balance? I
Okay.
think this is what this person is concerned about.
Yeah. All right. There's a whole lot to say on this. I mean, okay. But the first thing is this. Yes, it's possible. For it to be possible is dependent on you. First, you want to identify what relationships matter to you. Okay, because if it's social life, if it's between social life and having a future being financially stable, I would rather put in the work socially to ensure that I can be financially stable in the future. Now, you're going to want to look at your surrounding, okay? Who are the people that are around you? Who are the people that are around you? And are they people that are draining your time that could be used for more important things? Let's recall the 9 to 5. If you know that, okay, by 5 you're closing work, most likely you want to be home by 6, and you decide to hang out with colleagues. They are good people, okay? They are good people, and you hang out with colleagues to 7. That's a disadvantage, all right, to you. But now the other flip side is, okay, I want to be so serious with trading and all of that. I don't want anything to bother me. You have to make a decision. You have to make a decision. You have to time your life in such a way that you know that, okay, for my relationships, I'm gonna give this time of the day, this time of the week to this person so that I could build more cordiality or bond with this person. For example, your girlfriend, you know that as a girl, most girls want attention. If your girl is understands that you have to trade, you have to make money, you as a man also wants to ensure that within the week, okay, you pick, because you don't have to trade 5 days of the week. Or if you're not going to do it 5 days of the week, maybe because you're merging jobs and you're trading, you want to ensure that during the weekend, what do? You cut off work life, you cut off chat, and you give time to those people that matter to you. So yes, it's possible to have a work-life balance, but it's going to take you back to the question of how do you organize yourself around time. I wish I had more time to do that, but yeah, I'll leave it there.
Sadly, we don't. Thank you so much. I am Dexter.
Yeah.
It has been such an insightful session. And I would like to use this moment to let our listeners and our audience world over know that we're going to be having a part 2 of this session with I Am Dexter Traits. So tomorrow is day 3 of our webinar, and we're going to be having the second part of this 2-part series that we've heard today,
Hmm.
still featuring our key speaker for today. I am Dexter. So today we covered what beginners don't see, part one,
Yeah.
and tomorrow we'll be taking what beginners don't see, part two. Today we dealt on time and liquidity. And tomorrow I'll save the tea for when you join us again at 6 p.m. to 7 p.m. Nigerian time tomorrow. So, key things that we listened in on, and I'd like to drop it. It's also going to be posted across our socials. So, ensure that you're following us. The handles are on the screen right now. Our speaker said at some point in time today that perfection is unique to personal experience. So, in case you're wondering and trying to decipher what time is perfect to begin to take your trades in the trading industry. So, perfection is unique to personal experience. And that you got it today, doing it at the wrong time, isn't isn't what? That you got it today, doing it at the wrong time is just luck. It doesn't mean that you're always going to get it. So I think he said that to emphasize on the fact that it is important as a trader to pick the right sessions, even more than the anticipation of a win. Thank you so much to our listeners for tuning in to our live session today. It's been so impactful, so insightful, and it promises to keep being even more insightful. Thank you so much for joining us today.
Thank you.
I am Dexter.
Thank
It's
you.
been an honor, and we're excited to have you join us for part two tomorrow.
Yeah, I'm looking forward to it. Thank you so much, V.
Thank you for listening, and thank you for